think you're gonna trade well the next week, you come in and you just let that ego flex, bro, and it just kills you. Trust the yellow and red, the 8 and the 21 EMAs. They are going to save you. This is why the 8 and 21 EMA shift are so important. D1s off the 50 are the best D1s, which is fine. Not losing money is a win. Now you got it, exactly. So those are all actually red bars. None of that would have been an exit signal. The misconception with EMAs is that people try to trade short-term EMA crosses, and that is very hard. The 21 and the 8 and the 50 and the 200 and the 8, any EMA on the chart is only using price action to gather the information. So to trade before it breaks the Asian range is almost like forecasting, rather than waiting for it to break with a body and then reacting and getting a trade on it later in the day. If price says we're moving up and the RSI also says we're moving up, what would you call that? There's one word for it.
More people are buying?
Yes. Close. Confluence. If we have the perfect L50 in the sell zone and the EMAs also say sell it, now we got the two things working in the right direction. Right. Confluence and trend. So to just trust EMAs would be trusting your first doctor. But when we go get the TDI in play and we get a second confirmation, we got, what's it called? Confluence, and now we have a little bit more confidence in that trend. Confluence leads to confidence, just like you practice anything. You want to practice. It's not just like, oh man, I read this Gary Vee book and this shit got me going and I'm all hopped up. It might last a day, but like that's not going to actually get you to that point.